Yes, I know that we are doing this amendment session very late, and so already I have discussed about amendments importance for May 25 exam couple of times in multiple places. So you cannot imagine CA final question paper without amendments for May exam. So therefore I have just made a compilation of all the amendments in a summary form. So once this session gets over, so whatever, if I jot down any points also, so all these things will be shared with you, so you can see this particular PDF for reference purpose. Okay, so I'm moving on to the first amendment that we have is in supply under GST. So in this supply under GST, so first amendment is related to one circular, that is insurance companies usually what they will do the moment a car or a vehicle met with an accident. So then insurance company will pay money to the insured, and when money is paid to the insured, what happens to the salvage value? Whether the salvage belongs to the insured or the salvage belongs to the insurance company, that's the point of discussion here. So salvage means the leftover parts. Okay, so if the salvage belongs to the insured, which means if the damage is somewhere like 10 lakhs and insurance company pays only 7 lakhs, so 3 lakhs is the salvage value. So which means when the insurance company pays only 7 lakhs, so that 3 lakhs worth of salvage belongs to the salvage buyer, that is insured. What he will do with the salvage? He will sell it. When he sell it, will it become supply? No, it will not become supply. Why it will not become supply? Simple. So there is a consideration. So the insured is selling the salvage, he is getting the consideration. So 71A requires in the course or furtherance of business. So this will not come under in the course or furtherance of business. So when the insured is selling the salvage to any other person, so whatever money that he derives is not treated as supply, and consequently GST not payable. Same way, suppose if the insurance company pays to the insured 10 lakhs. So insurance company is telling, okay boss, I pay you 10 lakhs and you give me the remaining parts of the damaged vehicle, etc. to me. Now in that case, so who owns the salvage? Insurance company owns the salvage. What insurance company will do with that salvage? Definitely they will sell. So when they sell it for 3 lakhs, whether that will become supply and GST payable on 3 lakhs? Of course, yes. On that 3 lakhs, definitely GST will be payable, and reason being, so it is incidental or ancillary to their business. So their business is insurance and incidental or ancillary to business. So due to that reason, that activity becomes supply and consequently GST will be payable. So that is the point here. Whether insurance company is liable to pay GST on the salvage value or wreck value while assessing the damage to a motor vehicle. Suppose if the salvage remains with the insured, so not a supply and GST not payable. That's the first point I discussed. Second, salvage becomes the property of the insurance company. So sale of such salvage is treated as supply and GST will be payable. So that is with respect to this. What about the insurance compensation which is received by the insured? Whether that will become any consideration? No. That insurance compensation received also will not be treated as consideration in the hands of the insured, because so if that is a asset, business asset, or if it is in the course or furtherance of business only, it will come. So basically insured, if he is receiving the insurance compensation, so we cannot invoke supply under 71A because it's not a business activity for the insured. If it becomes business activity for the insured, then definitely it will become supply, but mostly it will not be a business activity. So that is the background of this. Then supply of metal scrap by a registered person to another registered person, as I already told you, is not covered under RCM. However, the said transaction is notified for TDS under section 51. So therefore, when a registered person is supplying metal scrap to another registered person, so the recipient should deduct 2% towards the TDS and remit the same to the supplier. Previously, TDS under section 51 was applicable only for government departments, government establishments like local authority, etc. But they have brought in this also, where the recipient is required to deduct TDS at 2% on the payment made to supplier. Always remember, TDS is on the amount remitted to the supplier, not on the contract value. But for application of TDS, the contract value should exceed 2,50,000. But once the TDS is applicable only on the payments that is remitted, again excluding GST, then only TDS is computed. Next, third amendment that we have is notified services under notification 13/2017. So in this Sir CG got salads. So we have one exemption related to import of services. So this import of service is exempted. Import of service by an Indian establishment of a foreign airline company. Say for example, you take Singapore Airlines. Singapore Airlines is having an Indian establishment. They are importing services from their head office. Okay, so with consideration or without consideration? Without consideration, that is very, very important. So it should be without consideration, where Ministry of Civil Aviation certifies that there is a reciprocal agreement between India and foreign country, which means for an Indian airline company outside India, they have an establishment in Singapore. So Singapore government has given some exemption too. So Indian like airlines, foreign establishment. So reciprocal agreement will be there wherein we will be giving the exemption here. Okay, but this condition is crucial, that Ministry of Civil Aviation certifies that there is a reciprocal agreement. Okay, so then in that case, this import of service will be exempted. So this is a newly added point with respect to the exemption. So this transaction is exempted. Next one, renting. In case of renting of immovable property, we have certain changes that you need to be carefully understanding here. First, residential property, renting of residential property. So we have two exemptions, no change in that. Even previously also we had that, now also we have renting of residential property for residential purpose to an unregistered person. So to an unregistered person, whomsoever that unregistered person may be, that unregistered person can be any person. Okay, person, it can be a company also. Okay, unregistered, so then it is exempted. Then second one, but it should be for residential property for residential purpose. Second one, what if it is to a registered individual? Registered individual for their family stay is also exempted. So these are the 2 points where we have exemption with respect to renting of residential property. In other cases, it will be taxable. Now, wherever it is taxable, so if the recipient is registered, it will be coming under RCM. So recipient is registered, whether it is for residential purpose or commercial purpose. The moment it is a residential property, if the recipient is registered, definitely it will come under RCM. So is there any exception to this, that FCM will be applicable? Only one place, that is if it is given on rent for commercial purpose, it is not exempted. If it is given for commercial purpose, it is not exempted. So renting of residential property for commercial purpose, it is not exempted. Then in that case, if the recipient is unregistered person, then it will be coming under FCM. So what you need to remember, so there are like lot of people will tell you different charts. Even I also tell different charts and all for this, but the chart and all will be so much confusing. You just stick on to this, so it will become easy for you. So there are two exemptions and only one condition for RCM, that recipient should be registered. And suppose if it is renting of residential property for commercial purpose to an unregistered person, then it will be coming under FCM. Then what if it is a commercial property? For a commercial property, we have one latest amendment, that is if it is accommodation services. But actually this accommodation services point is common even for residential property also, not necessary for commercial property. It is common for both residential as well as commercial property. This accommodation service is common because while drafting they did not specify accommodation of a commercial property. They said accommodation services, which means accommodation service can be of residential property or commercial property, but there should be a minimum period for which it should be given on rent. What is the minimum period? Minimum period of 90 days means 90 days and above. Okay, 90 days also fine. 90 days and above should be given, minimum period of 90 days. And is it like continuous 90 days? Of course, it's a continuous 90 days, means in the bill itself, it should mention like check-in, check-out kind of. So continuous. Even this exemption is applicable for hotels, inn, guest house. Everywhere this exemption is common, not only for hostels or PGs, even for other establishments also they can claim this exemption. But remember, minimum period of 90 days. And what should be the charges? The charges should be per month, which is less than or equal to 20,000 rupees. So if it is per day also, you count. For example, per day 500 rupees. So for 30 days, 15,000 rupees considered. So that's how we need to compute. Even if per day information is given, you count it per month. So less than or equals to 20,000 per person per month, per month, then it will be exempted. So this accommodation is common for both residential, this exemption is common for both residential property as well as commercial property. And what are the conditions for RCM? So this also they have latest added, that is for commercial property, two conditions should be satisfied. Condition number one, supplier should be unregistered and the recipient should be registered. These two conditions should always be satisfied. Okay, then only it will come under RCM. What if the supplier is registered? Definitely it will not come under RCM. Supplier should be unregistered and the recipient should be registered. Then only it is RCM. And what if the supplier is registered? So it will not come under RCM, it will be FCM. So this is what in short that you need to remember for immovable property services. So any question that you get, you just apply this table and you will be able to crack the answer. Okay, so see, sometimes you should not get confused, and in exam they will confuse you. You be clear onto your application. When you are clear onto your understanding and application, even if the question they confuse you also, so you will not go wrong. Okay, but problem is that when you think too much, definitely it will go wrong. Next, then we are moving on to exemptions under GST. In these exemptions, so the next amendment is section 11A of CGST Act, also section 6A of IGST Act. So if there is any particular transaction on which GST was not at all paid in the past, so this is something called as past general practice. So in some previous period on a particular transaction, GST was not paid on that particular transaction. Okay, and so suddenly in Finance Act, say 2024, Finance Act 2024, they brought in the transaction into the taxable levy. Now in that case, can government roll back? So through Finance Act they gave that, and can they roll back? Yes. So when people make a protest and in the best interest of the people, again they don't have to go to the parliament for the purpose of removing it, so they can do that rollback without taking any parliament power. So that is this section 11A of CGST Act or section 6A of IGST Act. Government on the recommendations of GST Council may not recover GST short levied or not levied as a past general practice. Then next amendment is reinsurance. There are some exemptions with respect to insurance services. In that insurance services, we have reinsurance of an exempted insurance service is also exempted, like that one point is there. For example, insurance services provided to government is exempted, correct? So when insurance service provided to government is exempted, I am insurance company A providing insurance service to government, and the premium that I collect will be exempted. So now I will share that premium with another insurance company, so that reinsurance premium is also exempted, say insurance company B. Now insurance company B gives further reinsurance to another insurance company, that is called as retrocession. So that retrocession is also exempted. Reinsurance include retrocession, that is reinsurer further transferring risk to another insurer. Therefore, if reinsurance is exempted, retrocession is also exempted. Okay. Then next one, amendment 7. So this is with respect to education services. In that education services, so we have one point, NSDC, Sector Skill Council, like that. So now also same. So NSDC, National Skill Development Corporation, and then we have Sector Skill Councils. So they have three bodies now. One is awarding body, which will give the certification, assessment agency, which will conduct the test, exam, etc. Training body, which will conduct the training, that is coaching, etc. So these three bodies, if they provide any skill course, so money collected by them will be exempted. So previously only coaching fees was exempted, but now awarding body collecting any certification fee or assessment agency collecting any exam fee, that is also being exempted. So any scheme implemented by NSDC, vocational skill development course, or any national skill qualification. Next, amendment 8, affiliation services. Usually what happens, so for the schools, colleges, etc. and all, they will get affiliated to universities. Schools also will get affiliated to board, CBSE, state board, like that, for which they have to pay some affiliation fees. So not all affiliation fees will be exempted. See this, affiliation services provided by central or state education board to a school established, owned or controlled by government. Very, very important. So if there is a private school also will pay affiliation fees, but that affiliation fees received by the received from the private school by the CBSE or state board will be taxable. That is not exempted. Whereas affiliation service provided by CBSE or state education board to a school, only to school, established or owned or controlled, either they can own or they can establish or they can control. Okay, either central government, state government, local authority, government authority or government entity. So what is the difference between government authority and entity? Both are establishments, like body or authority established by government, in which it is established under an act of parliament or state legislature, or wherein government investment will be greater than or equals to 90%. That is what government authority or government entity. So government authority is for the purpose of carrying out the functions under constitution. Government entity is for the purpose of promoting trade or commerce. Okay, so that is about this. Next one, next amendment is services provided by government. When it comes to service provided by government, so same chart, not much change. So here two activities are excluded from supply, that is municipality or panchayat activities. So Gram Panchayat or municipality, if they need to do certain activities as per constitution, Article 243G or Article 243W of the constitution. So remember this, Article 243G or 243W of constitution. So those activities will be fully exempt, like not a supply, okay. And even liquor license by state government also not a supply, excluded from supply. All other activities are covered under supply. In that, for railways, they have brought in certain exemptions. There are 3 exemptions applicable to Indian Railways. Number 1, services to individuals. So usually railways will be providing individuals certain services like clock room and waiting hall charges, and even they will be providing this battery operated vehicles, platform tickets. So these services provided to individuals, the money collected will be exempted. Previously there was a confusion as to whether it will be taxable or exempted. So now they have specifically given it as an exempted. So services to individuals by way of sale of platform tickets. And next one is facility of waiting rooms. That's what they call as like first class waiting room, second class waiting rooms, like that. Clock room to keep our luggage. Then battery operated cars. Then next one, services by one zone or division to another zone or division. Usually railways operate on a zone basis division. First they will divide into zones, railway zones, and thereafter below that zone there will be division. So one division to another division, one division to another zone, or zone to another zone. Between them, if there is any activities, that will be exempted. Then next one, maintenance services to SPVs. So we need to understand here about the SPV. So there is a special purpose vehicle. Basically what this special purpose vehicle will do, they will create the infrastructure, and that infrastructure will be used by Indian Railways. Say for example, one particular track they may lay down, or they may construct one railway shed, or they can create one lift or escalator inside the railway station. So any kind of infrastructure can be built by these special purpose vehicles. That infrastructure will be used by Indian Railways, for which Indian Railways has to pay some money to the special purpose vehicles. Whether that money received by special purpose vehicles will be taxable or exempted, that will be exempted. You can see here, services provided by special purpose vehicles to Ministry of Railways by allowing them to use the infrastructure built and owned by SPVs during the concession period against consideration. So what is this concession period? So it operates on like BOT model, build, operate, transfer, for a particular period of time. So that particular period of time only they will be using it, and thereafter completely it is owned by Indian Railways. So for that period some money will be received by special purpose vehicles, that will be exempted. Same way, during this concession period, that particular infrastructure is actually belonging to special purpose vehicle, and they need to do the maintenance of it, but they may not be able to do the maintenance. For that reason, so this government, like Indian Railways only, will do the maintenance. So for example, it is your infrastructure, I am doing the maintenance, and which you need to do, actually you should do, but I am doing, for which I am providing you the maintenance service and I will collect some money from you. So that is also coming under exemption. That is this point. Maintenance services to special purpose vehicles in relation to infrastructure built and owned by SPVs during the concession period. So two activities. One is special purpose vehicles allowing Indian Railways to use the infrastructure for which they are getting some money, that is exempted. Second point is Indian Railways providing maintenance services to special purpose vehicles, for which special purpose vehicles will pay some money to Indian Railways, that is also exempted. Okay, that is with respect to this. Next one, services by government authority, governmental authority. I already told you, governmental authority means who? Governmental authority means, so any body or authority or any like board which is established under an act of parliament or state legislature, or in which government has invested greater than or equals to 90%. And what is the objective for which they are established? To carry out the functions under the constitution. Any service provided by them will be exempted. See, Article 243G or 243W of the constitution, these activities provided by government is not a supply. Not a supply. If it is provided by government authority or government entity, it will be exempted. Okay. So, therefore, RERA, Real Estate Regulatory Authority. Is Real Estate Regulatory Authority also a government authority? Yes. And any services provided by government authority will be exempted. Accordingly, RERA is a government authority, and statutory collections made by RERA is covered under exemption. So that's a CBSE circular. Next one, renting So in case of renting, already we discussed. So following are exempted. So in case of renting of movable property, 4 exemptions that in the past also we have this. So I have a motor vehicle that can carry more than 12 passengers. I am giving on rent to state road transport undertaking, that is exempted. But remember, greater than 12 passengers while counting the passenger seat. So like while counting the 12 passengers, don't include driver's seat. Then next one, I have an electric vehicle that can also carry more than 12 passengers. I am giving on hire to a local authority, that is exempted. Then I have a motor vehicle that can carry goods given on rent to a GTA. And finally, I am having a bus which I am giving on rent to a person who is providing transportation services to education institution up to 12th standard or equivalent. Okay, so that is I have a bus which I am giving on rent to you. You are providing transportation service to the school, so your service is also exempted, because when you provide services to school, transportation, that is exempted. Same way you collect, like you pay rent to me, I collect rent from you, that is also exempted. These are the 4 points with respect to movable property. When it comes to immovable property, for building already we have seen 3 exemptions. One is what? Residential property for residential purpose to an unregistered person, residential property for residential purpose to a registered individual for his family stay, that individual's family stay, and then accommodation services minimum 90 days and subject to maximum 20,000 rupees per person per month, that is exempted. Then in case of land also we have exemption, usually we neglect that. So see this, upfront charges. So say I have a land, and basically who is the supplier here? Government is the supplier. Government is giving land on lease to government authority or government entity, and that lease can be a short term lease or a long term lease, whatever may be the period of lease. And in that case, annual lease rentals as well as upfront charges will be exempted. Okay, whereas suppose if SIDCO, State Government Industrial Development Corporation, is having some land, industrial land or land for development of infra for finance business, if they are giving land on lease for industrial units, so that land lease is also exempted, provided it is a long term lease. What is a long term lease? Greater than or equals to 30 years. And here what is exempted? Only upfront charges is exempted. That upfront charges includes preferential location charges. Okay. Then next one, in case of transportation of passengers, as usual. So this is the small chart that you need to remember. So in case of railways, what are exempted? 3 points. Number 1, other than first class or AC is exempted, metro, mono or tramway is exempted, and this notified services to individuals by railways like platform tickets, and then waiting room, clock room, battery operated car services. So this, and airways same, if the starting point or ending point of the passenger is in northeastern states or Bagdogra and West Bengal, but remember it should be in economy class. And viability gap funding 3 years. Waterways we have 2 exemptions. Inland waterways is exempted. Coastal waters also within India is exempted, but it should be for other than tourism purpose, means public transportation. Public transportation means it can be operated by government, it can be government ferry, or it can be a private ferries. Then roadways we have 3 exemptions: non-AC stage carriage, non-AC contract carriage, other than for what purpose? Tourism or hire, and metered cab or auto rickshaws. Okay, no change in all these things. So this is the extra point that you need to remember. Next one, when it comes to import of services is divided into 2: OIDR service, other than OIDR service, same classification. OIDR service means any service which is provided over internet is OIDR services. If it is by non-taxable online recipient, it is taxable under FCM. Who is non-taxable online recipient? Any unregistered person importing services, or registered person who is registered only for deducting TDS. Only for TDS deduction means, which means that they don't have any other transactions, only they will be doing deduction of TDS and remitting the TDS under GST to government. Okay, so then in that case it will be taxable under FCM, so supplier will pay. If it is by other than non-taxable online recipient, then it will be taxable under RCM. Suppose if it is other than OIDR services, other than OIDR service, any other services, if it is imported by non-taxable recipient. So who is a non-taxable recipient? 3 people, that is individual, trust and government. Individual should be unregistered, importing for personal purpose, and trust, let it be registered and registered under GST, importing for charitable activities, and government, let it be registered and registered under GST, importing for other than business or commerce, then it will be exempted. Now one more exemption, as I already told you, that is Indian establishment of a foreign airline company without consideration, where Ministry of Civil Aviation certifies that there is a reciprocal agreement, then it is exempted. In all other cases, it will be taxable under RCM. Then there are 2 circulars related to this import of services. The first one, you see, usually what happens, there is a Indian subsidiary company or Indian related company affiliate, so which is taking loan from a foreign affiliate. Okay, so there is a foreign holding company, say, an Indian subsidiary company. The Indian subsidiary company takes loan from a foreign holding company, and for that loan the Indian subsidiary company is just paying the interest. Then in that case, will it be exempted? So logically, if they borrow money within India, so that is interest on loans, advances, deposits, which is exempted. As they borrow money from outside India, because of which it will become import of services and it may become taxable. To avoid that only, they have brought in a circular which says that if there is an Indian affiliate of a foreign company which is taking loan from a foreign company, if the consideration is only interest, or discount, then the said activity is not a supply, and so it is not a supply, so we don't have to bother about value under Rule 28. Why value under Rule 28? Because in case of related parties, we determine the value as per Rule 28, that point here. What if the consideration for the loan is processing charges or any documentation charges in addition to the interest? Then that particular documentation charges, processing charges, etc., that will become supply under 7(1)(b). Why 7(1)(b)? Import of service for a consideration, even though it is between related persons, 7(1)(b), and this supply of service where such processing fee and administrative fee is treated as consideration, and value under Rule 28 is applicable, and GST payable under RCM being import of services. Then next one, so 16th amendment, whether GST is applicable on ESOPs, ESPPs or RSU. ESOP refers to Employee Stock Option Plan, ESPP Employee Stock Purchase Plan, and RSU refers to Restricted Stock Units provided by a company to its employees through its overseas holding company. So again same, there is a holding company outside India and there is a subsidiary company in India. The subsidiary company wanted to allot ESOPs of the holding company to their employees, for which the subsidiary company will procure those ESOPs. Suppose if they pay only the cost, that is basically what they are buying is the shares, then in that case again, so as the underlying is securities which is neither goods nor services, there is no GST payable on that, so it is not a supply. So see this, in case of cost to cost reimbursement by the domestic subsidiary company to its foreign holding company, not treated as supply as there is no GST liability. Basically it will be transaction in securities without consideration. Suppose for these ESOPs, ESPPs, etc., if they pay some additional charges, so then that particular additional charges will become supply and consequently GST will be payable. Additional amount is treated as supply of service and GST payable under RCM by domestic subsidiary. So basically these two are connected if you see. So this is one point related to the loan and this is another point related to ESOPs, etc. Then miscellaneous exempted services. So here supply of service by way of providing metering equipment. Basically if there is a electricity distribution or transmission utility, so they will be providing distribution of electricity services, transmission of electricity services, and for that electricity services they will be collecting some money, and that is exempted because transmission and distribution of electricity by electricity transmission or distribution utility is exempted. Okay, now they provide lot of other activities as well. What are those other activities? Like shifting of meters and increasing the load, like 1 phase to 3 phase, like that lot of other activities they will be providing. There was a confusion as to whether those activities are also exempted or not. So finally, so they have brought in that as one entry itself that it will be exempted. You can see supply of services by way of providing metering equipment on rent or testing of meters, releasing electricity connections, shifting of meters or service lines, issuing duplicate bills, etc., which are incidental or ancillary to the supply of transmission and distribution of electricity. Basically, not only these activities, any other activity which is incidental or ancillary to transmission and distribution of electricity is also exempted. Okay, that is one point. This is one point. Then another one is related to research and development services. Basically what happens, so in section 35 of Income Tax Act, so scientific research expenditure is allowed as deduction, like that one point is there, na? So like that scientific research expenditure is what, like either they will be donating it to one association or university, etc. That association or university will be giving grant to me for doing the scientific research. Say for example, I am a research enthusiast and I am doing some research for which I will get some grant from the college or university or association. That grant received by me will be exempted. Okay, so research and development services, any person can do that. Okay, any person can do that against consideration in the form of grants from whom? From a government authority or a research association, university or college, or any institution notified under section 35. Basically, this research can be done by any person, but to do the research there are some approvals etc. required. So after getting that, if they do research, the grant received by them is exempted. Then next one, we have time of supply. In time of supply, there are only two circulars newly added. One is time of supply in case of hybrid annuity model projects. In case of hybrid annuity model projects, what will happen? Say for example, I am a builder and I will enter into contract with government, wherein I will lay down, like National Highway Authority of India, wherein I will lay down the highway road and I will also do the maintenance. So it is basically a continuous supply of service because it takes more than 3 months to complete and involves periodic payment obligation. So it's a continuous supply of service. And in case of continuous supply of services, usually what will be taken as the due date of invoice. So due date of invoice will be simple. Due date of invoice will be if so due date of installment is ascertainable from the contract, the due date of installment will be taken as due date of invoice. If the payment is connected to completion of an event, as and when the event is completed, that event completion date will be taken as the due date of invoice. In the absence of that, the date on which the payments are received will be taken as the due date of invoice. So this is the due date of invoice. Why this due date of invoice is relevant? Because for time of supply in case of services, time of supply in case of service, if invoice is issued within due date, then that is invoice is issued within the due date of invoice, then invoice date, actual date of invoice or date of payment, whichever is earlier. If invoice is not issued within the due date, then completion date or payment date, whichever is earlier, will be taken. So far same, no change. But what should be taken as the date of completion? In case of hybrid annuity model projects, they are telling the date of completion will be not the date of completion of the event, milestone event, etc., but the date of completion will be the due date of installment will be there. The due date of installment will be taken as the date of completion here. Okay. So hybrid annuity model contract is a single contract where the supplier is responsible for both construction of highway and its operation and maintenance over a period. It is a continuous supply of service and due date is determined as per section 31 subsection 5 and time of supply as per 13 subsection 2. Installment is payable by NHAI. That installment include both, okay, principal component as well as interest component. What about interest? Definitely it is included in value as per 15.2d. As per 15.2d, interest, late fee, penalty on account of delay in receipt of consideration should be included in the value. Accordingly, it will be included in the value. And what will be taken as the due date of installment? So due date of installment is considered as the date of completion. Basically, when date of completion will come, if invoice is not given within the due date, then only date of completion or date of payment will come. So the date of completion will be due date of installment. Next, another one is related to spectrum allocation. In case of spectrum allocation, again it is a continuous supply of service. So government owns a spectrum, it will be allocating spectrum to the telecom companies, for which telecom companies will pay one-time charges as well as annual royalties, etc. So we have one exemption. If the spectrum is allocated before 1/4/2016, that is exempted. But if the spectrum is allocated thereafter, definitely it will be taxable and we don't have any exemptions with respect to that. So here it is definitely continuous supply of services. And there are two options that will be given to the telecom companies: upfront payment or deferred payment. Upfront payment means for the sake of the telecom license. So first they have to pay one-time charges. That can be upfront at a time, or that can be payable in installments. Now in that case, how to determine time of supply? So the regular provisions of time of supply is not applicable. We have a regular provisions of time of supply that we will not take. But here they have derived a different time of supply. What is that they are telling? Whenever the installment is due or whenever the installment is paid, whichever is earlier will be taken as the time of supply. So GST liability arises when the payment is made or the payment is due, whichever is earlier. Payment is made or the payment is due. This is common for both. This is common for both, whether you pay upfront amount or installment amount. Whenever the payment is due or whenever the payment is made, whichever is earlier will be taken. Okay. And basically, how do we know which date the payment is due, etc.? There is something called as frequency assignment letter from Department of Telecommunication. In that it will be available. Okay. And that cannot be considered as the invoice. So this is one point. Frequency assignment letter issued by Department of Telecommunication to telecom operator cannot be considered as tax invoice. Then the next area that we are moving on to is place of supply. In place of supply, there is one amendment, that is, Generally, whenever the sale of goods happen through e-commerce platform to unregistered person, what should be taken as place of supply? We have got one section 10 subsection 1 clause CA, which says that whenever we are making sale of goods to an unregistered person, we need to take location of recipient in the records of supplier, otherwise location of supplier will be taken. Okay, and basically here whenever we are making sale of goods through e-commerce platform, so there will be two address, one will be delivery address, another will be billing address. So it is not a bill to ship to transaction, because in bill to ship to transaction there will be two parties, but here it is the same person, but that person has different address. Then what should be taken in this case? In this case they are telling you take the delivery address only as the place of supply. Say this. What is the place of supply in case of sale to unregistered person through e-commerce platform? Usually place of supply is the location of recipient in the records of supplier. In the absence of such details, place of supply will be taken as the location of supplier. This is a provision. Now, what if the billing and delivery address match? No confusion, one address only, take that address itself as place of supply. Billing and delivery address doesn't match. In that case, the delivery address, don't remember billing, delivery address record in invoice. Here address record in invoice means, so whether full address needs to be recorded, not necessary, even if the state is recorded, that is sufficient. Name of the state on the invoice is sufficient to be considered as recording the address of the recipient. Then next one, value of supply. In this value of supply, there is one amendment related to further sharing of incentives. Already one circular we had, that is MEITY, Ministry of Electronics and Information Technology, will be giving incentive to the banks, that is acquiring banks, for the purpose of providing UPI transactions. If you see consumer to merchant UPI transaction, there won't be any deduction. Full amount will be given to the merchant. That's the reason why merchants encourage UPI transaction. Then what is the benefit to these acquiring banks like HDFC or ICICI who are all involved in this? What is the benefit? They get an incentive from Ministry of Information Technology and Electronics, and this particular incentive will be treated as subsidy from central government. Consequently, it will not be included in the value. Now, that incentive will be further shared with others also. Who are those others? Lot of people will be involved in this digital payment ecosystem like Pine Labs, Paytm. Lot of people are involved. For them also, they will be sharing this kind of incentives, whatever they got, that is acquiring bank, further sharing of incentives. Whether that further sharing of incentives also treat as subsidy from government, and because of which it will not be included in the value. Exactly, that's where they gave a circular. But remember, all those people who are receiving the incentives, they should be notified under this NPCI, okay, approved by NPCI. Whether incentive amount received from MEITY, Ministry of Electronics and Information Technology, shared by acquiring bank with stakeholder is chargeable to GST. Sharing of incentive by acquiring bank with various stakeholders in digital payment ecosystem like Paytm, Pine Labs, etc. as approved by NPCI. That's very, very important. So as approved by NPCI is also considered as subsidy and not included in the value. Then next one, section 15 subsection 3, post supply discount. Post supply discount is allowed as deduction provided the terms are agreed before at the time of supply, and so a credit note is issued, consequently recipient reverses the ITC, then only post supply discount is allowed as deduction. So whether the terms are agreed or not before at the time of supply is clearly evident, but how the supplier will know whether the recipient will reverse the ITC or not, because that is also one of the condition. Only when recipient reverses the ITC, the post supply discount is allowed as deduction to the supplier. But how the supplier will know? For that purpose, what they are telling is that supplier first he will claim the deduction, and every year he need to obtain either a declaration. Who should obtain? Supplier should obtain a declaration or a certificate from CACMA. What is the declaration? That the recipient has reversed the ITC. If the ITC component in a financial year, like I am one supplier, I am giving multiple credit notes to the recipients for post supply discount. What is the ITC component for all these credit notes with respect to one supplier? ITC component with respect to all the credit notes with respect to one supplier. So we need to see if it does not exceed 5 lakhs in a financial year, then declaration. So recipient will give a declaration to the supplier. If it exceeds 5 lakhs, then recipient's CRCMA should certify that the recipient has reversed the ITC. Okay, so after the completion of the year, they need to submit that. How to ensure recipient has reversed the proportionate ITC? If the ITC component does not exceed 5 lakhs in a financial year, supplier shall obtain a certificate or undertaking from the recipient. If the ITC component exceeds 5 lakhs in a financial year, supplier shall obtain certificate from recipient's CRCMA. Okay. Next, look into the next amendment, that is 29. Time limit for availment of ITC. Usually, what is the time limit for availment of ITC as per section 16 subsection 4? So 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. There are 5 places where the time limit is common. That is time limit for issuance of credit note, time limit for availment of ITC, time limit for rectification of GSTR 1, time limit for rectification of GSTR 3B, and time limit for rectification of GSTR 8. 30th November of succeeding financial year or date of filing annual return, whichever is earlier. In case of RCM, when the recipient is issuing invoice, so how to determine the time limit for availment of ITC? Simple. Whenever the recipient issues invoice to the supplier, based on the invoice, we need to determine the time limit for availment of ITC. In case of RCM, where the registered recipient issues the invoice to the unregistered supplier, the date on which recipient issues invoice is relevant for determining time limit for availment of ITC. Then, so for certain financial years, that is financial year 2017-18 to 2021, so if ITC is availed beyond the time limit permitted at that particular point of time, and those ITCs were rejected by the department, now in that case, so what they are telling, had that ITC been availed by 30th November 2021, so for these financial years, ITC was availed beyond the time limit and it was rejected. Had this ITC was availed at that time by 30th November 2021, okay, and in that case, now, so even though it got rejected, so we are allowing them to enjoy the ITC, is allowed even though it is in violation of section 16.4. Then next one, in case of revocation of cancellation of registration, usually what happens, so there is a cancellation of registration. Because of cancellation of registration at that time, we cannot file 3B, so we cannot avail the ITC, we miss the ITC. And thereafter, we got cancellation order and we made application for revocation of cancellation and we got the revocation order, but the time limit to avail the ITC is over. For that reason, they added one more point, the regular time limit for availment of ITC or 30 days from the revocation order, whichever is later, we can still avail the ITC. So regular time limit under 16.4 or 30 days from revocation order, whichever is later, provided that time limit for availment of ITC not expired as on the date of cancellation of registration. So definitely we can avail this ITC. This for past periods also we are able to take. For that purpose, they have brought in one procedure. So registered person who is eligible to avail ITC as per the subsection 5 or subsection 6, they will make an application on 7/7/4 and officer, if satisfied within 3 months, will allow them the ITC, otherwise it will be rejected. The application will be rejected. Then next amendment is related to blocked credits, whether ITC is available on demo vehicles which are purchased for the purpose of giving test drives to the people, prospective buyers. So we can take ITC or not. Yes, we can take ITC even though it is not directly involved in further supply, but it will encourage in further supply. So due to that reason, ITC is allowed, because basically if you see motor vehicles capacity does not exceed 13. So if it is for further supply used in the business of transportation of passengers or imparting driving skills, then ITC available. So but this demo vehicles is not coming under further supply, and still can we take ITC? Yes, for that only they gave a circular. ITC available on demo vehicles if they are used for promoting further supply of vehicles. If demo vehicles are capitalized, what will happen? If definitely these demo vehicles are capitalized, it will not be kept in stock in trade. So when it is capitalized, ensure that you are not computing depreciation on the GST component. If you are computing depreciation on the GST component, then you will not be able to take the ITC. That point is there already. If demo vehicles are capitalized, ITC is available unless depreciation under section 32 is claimed on the tax component. Also, sale of such capitalized demo vehicles, GST is payable in terms of 18 subsection 6. What is that 18 subsection 6? That is whenever the demo vehicles are being sold, so like capitalized in like purchase of capital goods on which ITC is availed and it is disposed of, so much of the ITC availed minus 5% for every quarter or part thereof from the date of purchase till the date of disposal, or GST on sale value of the demo vehicle, whichever is higher, will be payable. Okay. And what if the demo vehicles are used for non-business purpose? Non-business purpose means personal purpose of the dealer or as a part of marketing services, then in that case ITC is blocked. ITC is not available. Like manufacturer will be sending one car to the dealer to just put it in a display in one like mall or airport, etc. So in that case, whether they will be able to take ITC on that? No, ITC cannot be taken on that. Only for demo vehicles which is used in trials, like test drives, on that only. Next, whether ITC is available to insurance companies on the expenses incurred for repair of motor vehicle. Usually these garages or workshops will provide the repair services for which insurance company will pay the money. Suppose if insurance company pay the money, the bill will be in the name of insurance company, definitely insurance company can take ITC, there is no issue. But there is something called as reimbursement mode of settlement claim. What will happen? First the insured will pay the repair charges and the insurance company will reimburse the insured. In that case, can the insurance company take ITC? Of course, yes, if the invoice is in the name of insurance company. So, reimbursement mode of claim settlement, insurance company can avail ITC even though expenses initially incurred by the insured. However, invoice for repair should be in the name of the insurance company, even though insurance company has not made the payment to the workshop directly, but even then they can take ITC, but only condition is that the invoice should be in the name of the insurance company. And suppose if the repair cost is 10 lakhs and the insurance company has paid only 6 lakhs, then in that case, even though for 10 lakhs invoice in the name of insurance company, they can take ITC only to the extent of 6 lakhs. ITC to the extent of amount reimbursed by insurance company, but not on the entire repair cost. Suppose if the invoice is in the name of insured, if invoice is in the name of the insured, insurance company cannot take ITC. What about insured? Insured can take ITC provided the motor vehicle purchased is eligible for ITC. We have 4 services. Number 1, renting of motor vehicles. Number 2, so insurance services. Number 3, repairs. And number 4, authorized service center services in relation to motor vehicle. If motor vehicle eligible for ITC, these 4 services also eligible for ITC. If the motor vehicle purchase is not eligible for ITC, these 4 services also not eligible for ITC. That point we need to apply here for insured. Insurance company cannot take because invoice is not in the name of insurance company. Then, whether IT is available on ducts and manholes used in network of optical fiber cables. So basically these telecom companies and all will be asking some builders to lay down the, even telecom companies also will do, so they will lay down the ducts and manholes for the purpose of laying down optical fiber lines. So these ducts and manholes requires construction cost, and whether they can take ITC with respect to this? Yes, they can take ITC with respect to this, no issue, because even though telecom towers is restricted, so for ITC, construction expenditure for telecom towers, ITC not available, but this will not come under telecom towers. Even this will not come under pipelines laid outside factory gate. Ducts and manholes, which are integral part of optical fiber cables, qualify as plant and machinery and can avail ITC on the same, even though used by the telecom companies, as only telecommunication towers are excluded from the meaning of plant and machinery. Even they do not fall under pipeline, so they can take ITC. Whether ITC is available on goods purchased for free replacement during warranty period. Basically, in case of free replacement during warranty period, already we had one circular. Now this is just an addition to that. So in that, just these 4 points you need to remember. So previously also we had, whenever a part is purchased for replacement during warranty period, on that part purchase ITC can be taken. But now they added not only part, even the entire product is replaced also ITC can be availed. Okay, either the part is replaced or the entire product is replaced, ITC can be availed, and that replacement can be done at the manufacturer stage or then can be done at the dealer stage. But ITC is available to whomsoever is purchasing. For example, I am a manufacturer, I am purchasing the part or I am purchasing the product and the replacement is being done. Now in this case, so either like I will be able to take ITC, and if the replacement may be done by me or the replacement may be done by the dealer, but I can take ITC. Whether a part or entire product is replaced during warranty, ITC can be availed on goods purchased for warranty irrespective of whether any consideration is charged or not with respect to such warranty repairs. Then next one, where the distributor uses his stock for replacement. So already distributor will have an inventory, using that he will replace the product during warranty, and the manufacturer will replenish it. While doing the replenishment means refilling, I will send a part. Whether that is supply? No, that is not treated as supply, and I can enjoy the ITC. So where distributor uses his stock for replacement, manufacturer replenishes the stock, on which manufacturer can take ITC. Then next one, what is the treatment of additional warranty charges? Any amount extra collected for warranty. Remember, if that additional warranty charges is collected at the time of sale of original, like at the time of original supply and from the same person. So same time and same supplier, same time, same supplier, same time, same supplier. Then it will be treated as composite supply, and we need to take the rate applicable to the product for these additional warranty charges. For example, you are buying a TV and the TV rate is 28%. At the time of buying TV, you pay the additional warranty charges. At the same time from the same supplier, then in that case, on that additional warranty charges also we need to pay 28%. What if we pay the additional warranty charges at a later point of time or same time from a different person? Then we will treat as an independent supply and the rate of 18% will be applicable. So it will not become a principal supply concept. So amount paid for extended warranty taxable at the same rate applicable to goods if the warranty is taken from the same supplier at the time of purchase of goods. If the amount for extended warranty paid to another supplier, it is treated as a separate supply. Even if it is after purchase of TV, if you pay that either to same supplier or different supplier, then also it is treated as a different supply and it is an individual supply chargeable to rate at 18% general rate. Okay, next. So in case of composition scheme, we have only one amendment, that is annual return is there na, annual return time limit previously 30th April, now they have extended it to 30th June. So file annual return in GSTR4 by 30th June of the succeeding financial year. Then next one, in this various documents involved in GST. So I told you recipient has to give invoice to the supplier if the supplier is unregistered and the supply is covered under RCM. If the supply is unregistered and the supply is covered under RCM, so recipient shall issue invoice within 30 days from the date of receipt of goods or services. So there is a lot of confusion as to whether this is applicable for May 25 or not. Safer side, you remember this for May 25, you write nothing wrong in that. Okay, next one. In registration, there is one amendment for procedure for registration. Usually, whenever you are making application without Aadhaar authentication, so what you need to do after submission of application, so the person should visit the nearest facilitation center without Aadhaar authentication. Visit the nearest facilitation center where the verification of photograph and verification of original copy of the documents are completed. Okay, so that needs to be done. This is one amendment, and so the physical verification need not be in the presence of the applicant. That point is already there. Then biometric Aadhaar authentication is now extended to all states and union territories for the purpose of completion of registration application. Then here, meaning of contravention of provisions, that is generally there are certain reasons for which the registration can be cancelled. In that, many reasons are there. You can remember this: frantic violation of bailer. These are the various reasons why the registration of a person can be cancelled. First, frantic. In that, F, fraudulently if they have obtained registration obtained by fraud. Okay, then returns are for returns not filed for consecutive 6 months or 2 quarters. A, annual return for composition scheme not filed within 3 months from the due date. Then N, no longer liable to be registered, means they would have their threshold limit would have, their turnover would have fallen below the threshold limit, or they might not be covered under section 24 compulsory registration, etc. Then T, transfer or discontinuance of business. Then I, invoice without supply, invoice default if they have done, invoice without supply or incorrect invoice. Or C, there is a change in constitution of business. All these cases, what should happen? The registration gets cancelled. Change in constitution means individual to partnership firm to company. Then violation of, so if they are violating bank details, furnishing bank details within the time. So there is a time limit for furnishing the bank details, that is 30 days from the date of registration or date of filing GSTR1, first return, whichever is earlier. That is a time limit by which they need to update the bank details after registration. If they have not updated, that will lead to cancellation of registration. Violation of anti-profiteering order and violation of ITC availment, means they have availed ITC in excess, and violation of liability in GSTR1 greater than GSTR3B, or violation of electronic cash ledger payment of 1%, that is as per rule 86B, if my monthly taxable turnover exceeds 50 lakhs, I have to pay 1% of my liability through cash ledger. If I violate that, that will be a reason for cancellation of registration. One more point they have added is that you have got your registration cancelled and you made an application for revocation. They gave a revocation order. After revocation order, within 30 days, the returns from the date of cancellation to revocation order you should file. If you are not filing within 30 days, again that will lead to cancellation of registration. Return not filed within 30 days after revocation order, that is this. Registration of a person is cancelled and such person made revocation application and proper officer passed revocation order, but returns during the period of cancellation to revocation not filed within 30 days from revocation order. So definitely that will lead to cancellation of registration again. Then in payment process, so there is one important point, definitely this can be tested, that is if you have sufficient balance in the cash ledger, any head, if you have sufficient balance in the cash ledger, okay, so for example IGST or CGST, any balance, any head, and either minor head or major head, if you have sufficient balance in the cash ledger, because of delay in filing 3B, there won't be any interest. Usually for delay in filing 3B, we used to pay interest on net liability at the rate of 18% per annum from the due date till the actual date of filing 3B. But if the sufficient balance is maintained, by when? By the due date of 3B. So if sufficient balance is maintained in cash ledger by the due date of 3B, interest is not payable on account of delay in filing 3B, headwise or total balance not specified. So you take the total balance, this is what ICAI has considered. ICAI view is that they are asking us to take the total balance. So any head, if you have sufficient balance, interest will not be applicable. Suppose if there is a delay in filing 3B and the 3B net liability is somewhere like 4 lakhs, but you have only 3 lakhs, then in that case on 1 lakh interest will be applicable, okay. Next amendment is related to this TCS, already we know. So whenever there is a supply of metal scrap by a registered person to another registered person, TDS will be applicable. And next one, so what is the rate at which TDS will be applicable? 2%. But one point is there, between notified recipients, usually TDS is not there. However, if other than supply of metal scrap, for example, between government and PSU, if there is any supply, there is no TDS because they are notified recipients. Government also notified, PSU is also notified. But if there is a supply of metal scrap, definitely TDS will be applicable. That is this. So supplies between notified recipients other than supply of metal scrap. Then one more amendment in TCS is that the rate of TCS is 0.5%. Previously 1% or 0.5%, that is 0.25% CGST, 0.25% is GST. If it is interstate supply, 0.5% IGST. Then we have GSTR 1A, one newly added return. So this is amendment of GSTR 1 in the same month. For example, by 11th I am filing my GSTR 1 and by 20th only I need to file my 3B. So in these 9 days, if I want to amend my GSTR 1, I can amend my GSTR 1. But this amendment of GSTR 1 so will not have an impact in the recipient 2B in the same month, will have an impact in the recipient 2B in the next month. Okay. So GSTR 1A for amending the details furnished in GSTR 1 before filing GSTR 3B of the respective month. Okay. Next, one more amendment. This is related to how the invoices to be reported in GSTR 1. In GSTR 1, if it is B2B supplies, always invoice wise. Whatever may be the amount, B2B means always invoice wise. B2C, we need to check whether it is interstate or intrastate. If it is interstate, then invoice previously 1 lakh, 2 lakh 50, now 1 lakh. If invoice value greater than 1 lakh per invoice, invoice wise. If the invoice value does not exceed 1 lakh per invoice, state wise consolidation. Intrastate supplies, always consolidation. Previously in this place it was 2 lakh 50, now they reduced it to 1 lakh. Then GSTR 4 time limit, already we know 30th June of the succeeding financial year. So this is the new GST return structure. So what will happen? Between 1st to 11th, I will file my GSTR 1 and that is I will add the invoices. As soon as I add the invoices, supplier add the invoice in GSTR 1 to the recipient, it will be reflected in invoice management system. In that invoice management system, so what will happen? The recipient should take an action. What is that action? Either they can accept the invoice or they can reject the invoice or pending. Rejected invoice means they cannot take ITC with respect to that. Accepted invoice means ITC will be taken. Pending invoice means transferred to next month invoice management system. Whatever is accepted will go to 2B. Suppose if no action is taken, everything will go to 2B. Now, what will happen? Supplier filed GSTR1 by the due date, and thereafter supplier can amend the GSTR1. So, by filing GSTR1A, and that amendment can be done anytime. That amendment can be done anytime before filing GSTR 3B. The advantage is what you know, interest liability will be saved. Next month GSTR 1, if you are adding, unnecessarily interest will be payable, so interest liability will be saved and we can file this anytime. But GSTR 2B of next month only gets updated. Okay, so that is about this.